Bit of a mixed bag out there today. So I want to do a quick market update. And then I also want to apologize to you guys. There's a couple things I have to come clean on, which I'll get into in just a few minutes. So talking about the markets first, we have a lot of capitulation that's happening right now, and it's across all of the indices. Notice that we had the S&P 500 that was down 0.75% today. NASDAQ was down about 0.5%. And then the Russell was down almost 2%, bid back up to about 1.9%. So yeah, overall, some pretty fair weakness going on, but this isn't like falling out of bed, can't get up kind of weakness. This looks like a lot of things that have had a insane run from about mid-April until now. So it's kind of like if you were to go out and sprint as fast as you can, sooner or later, even if you're that dude that can run a sub 2-hour marathon or whatever the hell it is, you got to take a break sooner or later. So that's kind of what this is to me. I see not a significant display of weakness across the market. As I look across breadth indicators, I see net highs lows, for example, is turning down. Net highs is absolutely coming down, but it's not diving into lows just yet, although lows are now starting to expand. This is gross lows right behind my head here. So you can see yesterday it was hovering right around 39. Today it's down to 67. So if this starts accelerating meaningfully, that starts to become more of a concern to me. But right now it's still in kind of this middle zone that doesn't cause for much concern, in my opinion. It looks like a bit of a pullback going on. On to GameStop and why I need to apologize to you guys. It is because I sold my long options today. And here's what happened. The market opened and we kind of hovered around here. It didn't look like we were breaking out anywhere. So literally all I did was set an alert for anything above 28.98 to get back in. And I said, it looks like we're stalling out. I'm going to take the longs down. But I played a little bit of a game with the market because we all know that the market essentially knows what I think and what you think. And no matter what you do, it's going to try to make you wrong. So I figured if I sell the longs and keep the short calls on, that would send the market higher, right? Out of the longs, you keep the short calls against the shares now that I don't want to unwind yet. And you think that would send the market higher. It didn't work. Unbelievably, it didn't work. I ended up actually closing the calls for a nice profit on the short side as well. So I made money on both the long and short calls, but the game plan didn't work. The market obviously knew what I was doing and it didn't play any games out here today. So it did not fall for my trap as per usual. That was like a last ditch effort to make this work for everybody. And it didn't happen. So my bad. I'll have to be smarter next time. It must have known about the shares. That's what I'm missing here. It knew that I didn't want to unwind the shares. And it was like, fine, get rid of the calls. I'm going to punish the shares. That's got to be what it's on about. Now, little does it know, I have my first alert set here. Maybe I'll set a trap alert right here. I'm going to set a trap alert. And if GameStop goes below this alert that I just said, I'm going to sell. So we'll see what happens. GameStop, your move. So what's going on in here, though? It does look like GameStop is rolling over a little bit. There's no doubt about it. It's hovering right around this point of control. There's a lot of people continuing to transact here. When I look at the overall view of volume for today, it's much lighter. So the volume contracted meaningfully below the 2-week average. Now, the other thing that I want to highlight from what I'm seeing here, at least, is the sale volume is not chilling out. The sale volume is like 90% today. So there are no shortage of people unwinding for various reasons. There's a lot of speculation as to what's going on there, but it's clear it's happening and it's having an effect on the price. How much of this is just because of GameStop being GameStop? Probably a lot of it, but there's also broad market weakness. So if you look across small caps in general, they're not having a great day. And you can take a look at that if we go into something like the visualize tab and we grab the Russell. It's a lot of red. It's a lot of red. You wouldn't want this to be what you're opening your portfolio up to because everything is getting crushed. All I'm highlighting is that there's very few segments of strength right now, although there are some in things like financials, energy. Those things are not underperforming so poorly right now. Builders are doing okay. Small cap financials are getting killed, but large cap is not quite so bad. It's still not great, to be clear, but they're not like getting hammered as what we're seeing over here in the financials on the small cap side. They're really getting beat up. So let's take a look at the options chain. We know already that I'm out of my front positions via options. I'm waiting for a re-entry. We had a ton of volume today. There was no slowdown. 360,000 contracts traded for calls against 100,000 puts. For the calls, the vast majority, the overwhelming majority here is in 19 July. We can take a look at that at 212. And if we go out and we look at this 26 July expiration, there's activity there, but it does look like the 16 AUGs are starting to enter the equation. That's what these yellow rectangles are, people getting in there. So if we compare those really fast, for next week's expiration, it's only 79,000. It's essentially 80,000 calls versus 32,000 puts. And then in 16 AUG, it's 32,800 against 9615. So what I'm seeing now is also fairly standard for what I'm starting to pick up as kind of normal for GameStop, where the front expiration cycle, especially if it's an OpEx, is way busier. And then the weeklies tend to slow down a little bit. And then the monthly, as it comes up, probably will start to pick up a bit. You can see that being reflected here, literally in the implied volatility. The implied volatility for the rest of this week, all 1 day left, is 155%, drops to 131, 129, 125, then back up to 131.5. That's a meaningful discrepancy between these. And again, it does have earnings coming up on the 4th of September. This is not then. So this isn't elevated because of some sort of earnings release. It's elevated because it's a primary expiration OpEx for GameStop, which has still not chilled out yet in a massive way, at least. So I want to highlight a couple other things really fast as I look at this. The volume today was light. So I looked at the total premium transactions, and I mean, we have what? 1, 2, 3, 4, 5 trades that are above 100,000. So we have, whoever this is at 99,000, could you not have just done 1,000 more so that it could be in this, you selfish human being? Come on now. And they sold the puts. They're bullish here. They sold puts and they couldn't do $1,000 more. Unbelievable. Sometimes people are so selfish. So it's just slowing down. It's slowing down a lot is what I'm seeing in the options chains. Again, like if we go back to the 17th and we take a look at some of the transactions we were seeing there, take a look at how many were above 100,000, a much more significant amount, with the top 3 topping $1 million combined. I'm not even looking at their bought, sold. I don't really care. In this case, they're pretty much all bullish trades, but I just want to see how engaged are these options chains? How busy are they? We go back to the 16th, same story, tons and tons of positions getting put on. But you'll notice something. A lot of these positions are not for this front expiration. This is a prime example of people who have money making informed decisions with how they're structuring trades. Notice how many of these big positions that were put on for the 16th were for the Friday, this coming Friday, the 19th of July. I am looking, I see one for the 26th of July. And then I see 2 down here for the 19th. That's pretty much it. This shows you where people typically that have decent resources available to them, how they set up their trades. There's a reason why they're not in these super short-term expirations. So to me, so far, it is a function of keep an eye on things, as I've been very closely looking for any sort of interesting activity that really starts to pique my interest. Some of these transactions, like these 25s, these are for tomorrow, bro. This was at the 25s. They came in at 290. So they came in right at the offer and they paid $137,000. Fingers crossed. I mean, I hope it works for them. But then I also look at that and I think tough way to make a few bucks. Got to be honest with you. So we'll see how that pans out for them. If we look at those 25s and they're right now trading for $1.10, they got in at $2.90. So they've essentially cut down to a third of what their overall cost was in a day, literally today. This is the fun and the beauty of trading really, really short-term options is they giveth and they taketh. And from our homeboy that came in at 0731 Pacific time with those 25 calls, 471 of them. Salute to you, homie, but it's not looking great. And again, this isn't to shit on them. I hope this prints tomorrow. I really do. But you can see that they obviously didn't put this trade on for $2.90, expecting it to go to $1.10, if I'm being generous. Like that's the problem with these. They're going to move super fast. So as always, if there's anything you want me to take a look at, let me know. I am going to be watching this pretty closely tomorrow for sure. Be an outlier. I'll see you guys later.